Hello guys, I'm Mariano, the Trading Parrot. It's 8 p.m. in UK time and I want to address the elephant in the room because we have confirmed a breakout, in this case a global one on the 4-hour, which is pretty exciting. But currently the retest process has been a little bit of a mixed bag in my opinion, and since we are entering into the weekend price action with low volatility expected, but at the same time we have the candle close tomorrow for November, and November is such a decisive month, so I want to cover that from the short time frame perspective. But since I haven't updated you on CoinBureau trading since early this week, I'm also going to spend some time wrapping up the week, making sure that if you have missed the updates, you know what we've been up to. And I have to say, it's been a pretty awesome week. I'll give you all the details. And whatever you do today, do not miss the link to my 64 charts that this week I release for free on my website. More of that in just a second. Guys, if you like this type of content, make sure that you're subscribed to the CoinBureau trading channel. I personally publish 3 videos a week. It's been so far one on Friday, one on Sunday, and one in the middle of the week. But if you are a hardcore Bitcoin trader, you like swing trading, and you want to stay on top of the price action, then I definitely recommend you to also subscribe the Trading Parrot, my personal channel, where I publish typically 2 videos per day throughout the week, and even 1 video per day on the weekends, covering Bitcoin price action, general markets, altcoins as well, sometimes some live streams. We're gonna start with the wrap up of the week, and later in the video I'll cover the current status of the 4-hour daily time frame, the price action expected for not just the weekend based on CME gaps, but also the candle close of the month and what I'm expecting to see for December. So we started this week having a wild card under the sleeve, which was the CME gap that we produced to the upside. On Monday, when CME market opened, we left a gap between Friday and Monday early open of the Chicago exchange. It was such a small gap of just $500 to the upside, but you can see that no matter how small the gap was, since we are in an uptrend, it made it extremely easy for the price to just hit it. Unfortunately, after closing the gap, the price decided to dump and to use that as the beginning of the week. On Saturday last week, we started calling for a breakdown to the downside on Saturday actually, and that was more or less on this candle at 1 p.m. At that point the price was still at 98.4k, but the RSI was already shouting that there was a breakdown. The breakdown was confirmed at 5 a.m. but I was sleeping, so at 9 a.m. as soon as I saw it, I made sure that you were aware on Telegram, Instagram and Twitter on my personal accounts, which if you subscribe my YouTube channel, you're gonna find the links on any single video in the description. You can see this was the actual post calling all degens, all people that like the high risk, to pay attention here because this was an actual breakdown with a good potential for downside. You can see the time, that was 9 a.m. and then after that we made a whole trip from RSI 70 into RSI 33. Pretty impressive move because it also broke down the global support that we were having on the 4-hour and respecting it since early October. After that, we progressed in the week around Tuesday, looking for a reversal, looking for a formation of a W pattern in here. And we ended up using 2 reversals. One that was not the final reversal, and then a second one when we got the bigger W bottom formation, where we actually were looking for hitting the red line as resistance and hoping for a breakout. The first W pattern gave an upside of 3k, and the second one, starting from even lower, $500 to be more precise. The first call out was in this candle when we were roughly at 91k, and that moved the price, but only 3k as you can see in the price. And the second call out was from here, very close to the 91k, and so far we have had an upside of above 8% in total. Of course, that doesn't mean that you can take all of that as the profits, but those 2 are the ones that I call the very early, very risky entries that I prefer not to take. I usually wait at least for the breakout of the local trend line, which is this red line that crosses from one extreme to the other, but as you can see, it doesn't come from the very top. That's why I call it the local breakout, which happened in here. In my opinion, the 3 entries have been pretty risky and quite difficult to manage in this week. I'm not gonna claim that it was a simple week to figure where the price was gonna head to, and I'm not gonna say that I was completely convinced about any of these entries. Indeed, I call for caution in each one of them. If you remember, and if you watch all my videos, the ones in the morning or evening. But finally, looking back in time now, doing some sort of retrospective, I feel like the entry below the range was the one that if I could choose, I will pick that. And you will say probably, of course, that's the one that gives you the lowest price. But I'm not just thinking about that. Obviously, this is the one that gives you the full 8% upside. It's just that there is something that I'm starting to figure these days, which is when you have a breakout local in here, you always have to think, what is my upside? And in this case, it's just 13 points of the RSI. This one in here, looking at it just from the distance, is giving 16. So it's a longer trip into resistance. So in the worst case scenario, you enter here and you hit the resistance with a potential longer projection than if you wait for a breakout in here and then you have to go into the white line. And now going into this section, it does have a longer projection, whether you use the target based on percentile nearest rank, which are the statistics at the top, giving you 87 and a projection of over 27 points of RSI, more than double that in the middle, or if you use the cap and handle or inverse head and shoulders that we can see in the bottom information here, that gives a little bit less just up until 82 on the RSI. But the problem is that this breakout we have in here needs to confront the current big boss, which is the options that we have expiring today, the 9 billion with expected volatility, which we didn't see that much really, and the selling wall that has gone from 320 million and right now is back to over 208 to be more precise. This morning was roughly 192, so it has increased around a 10% during the day, we could say. We can also see that the largest whales, the purple ones that are leading, those are the second largest ones, and the brown ones, which are the top largest ones, are at the moment pointing up, buying. So let's confront the elephant in the room. If you have been watching my channel and you see this chart, you should immediately spot it and think what is wrong with this structure. The structure is wrong because this breakout is clean, right? We close a 4-hour candle at 53. Perfect. Then there is a retest and the retest doesn't even come to the red. Perfect. Check. But then here we have a breakout at 62 and then the retest comes back to the previous range at 58. That is below 59, which is where the trend line is. So can we consider this a fake out at the moment? And I will say yes and no, which is probably going to annoy a few people that are watching the video. That's why I'm laughing already. I can see the comments below coming in before I even say anything. The reason I say yes and no is because technically the RSI is doing a fake out. It's coming back below here. But whenever I put a trend line that needs to get broken and it breaks, my first reaction impulsive move is to place a line that gives me the support. And I use two supports. First support is the breakout coming back for a retest and continuation. So that is the support given by the white line. But then I also, let's change the color of this and let's make it green. And then I also use the support of the green line. So in case this broke out like this, I expect it to hold above the green line and not to break below it, because otherwise we get again a breakdown and the whole story repeats, just like we had in Saturday, right? In which case we could do a breakdown like this and continue putting a even lower low, possibly. So long story short, the RSI hasn't broken below the green line. So we have a last line in descent in there. And second reason why I'm allowing that and saying maybe yes, I'm going to be a bit more flexible here. Whether I'm going to regret it later or not, that's another story. And make sure that you make your own decisions. You are here either to learn or to know what I'm doing, but have your own bias and make your own decisions. Reason is because we had the breakout in here with a big engulfing green candle relative to the red one. Good. We closed it above the trend line. Good. We went into the first resistance at 98.4. That was holding the price for many candles, and then it flipped into resistance in here, and once again it caused a rejection. Fine, but have we completely lost the 4-hour structure with this rejection in here? So far, no. We haven't even come back into the previous range of the resistance of the trend line in here. So I am tempted to still hold on to the idea that this can have another attempt at 98.4, possibly on Saturday. So we'll keep my eyes open. It's a very delicate assumption. I'm going to show you later other indicators that are showing selling pressure at the moment. So from the point of view of RSI and price, I want this to protect this move up. I want to break out somewhere in here, and I don't want to lose this and come back to put a new lower low in here, because then we start breaking the structure and we start delaying things. And also, I would like to mimic in a way what we have done in November in 2020, where we have a breakdown into Thanksgiving period. And after we finished with that, then we started pumping into December. So I would like to see something like that playing out in here as well. At least it's fair to wish for that. So I'm not going to cover the RSI levels of the 4-hour in this particular breakout, because we are already kind of messing up with this support resistance, and we have the green line in here. Everything is very narrow around the price. Really what I want to see is price now shooting back up with a green candle, breaking the 98.4, closing a 4-hour above that, and starting to battle the 100K. Very simple. That's what I want. If we're not going to do that, and we're going to start breaking the green line, and we start coming back down, we might as well start considering this as a double pot, as a double top, and maybe start visualizing a bit longer battle against the 100K, always with the mind open. Don't marry a target, don't fall in love with them, because they're gonna treat you bad if you do. And on the daily, very interesting developments. In the morning, we were talking about this resistance, and we say that it will be really great to close Friday with this guy sticking the head above the red, above the yellow trendline resistance, and in which case we could put together the breakout of the 4-hour and the daily happening concurrently on the same day, which is pretty bullish. But as you can see, after we spent the day above it, we came back, and now we are back, and now we are at 68. So this line in here remains our resistance until further notice. You can see in the price that we broke out from this yellow resistance, and we hit straight into my green line, which was that RSI trendline resistance that we just saw in here. Throughout the week, on the daily, it's been fantastic, the forecast, because after we broke out from 68 on Saturday, we were always visualizing as a high likelihood area for a target to the downside, the actual point of control. And you can see that we were $500 away from being perfectly accurate. That became the support. During the week, we also cover the past performance of Bitcoin on the daily against CPR and against MACD. And in the previous cycle, in Thanksgiving, we went all the way to the second resistance at 82.3. We are 1 day away. We still don't know, but so far, instead of using the second, we are using the third. So relative to 2020, this has been a better November. Drawdown in 2020 was around 16%, and drawdown in 2024, it's been 8% from the top. In December in 2020, we were at this point already rallying for 3 days into the close of December, into the close of November, and opening December at a high and going into drawdown for 2 weeks, just going sideways pretty much. And on the second week of December, we start rallying again, producing a very similar performance relative to CPR, which means hit the pivot and break all the resistance, making a move of 100%. We went from around 16K to 30K in December. This week, it was pretty much the start of the show once again, the delta. Every time we are in one of these red bubbles, we get all our focus on looking for longs. We pay attention all the way down this week up until we found a bottom in here. We started looking for bottom information. Then we talk for 2 or 3 days. We should be heading now into the resistance. Let's see if we can break out. Yesterday we broke out. We started talking about going into the yellow, into the green. I don't know what's wrong today with me with the colors. I'm getting all the colors upside down. I think I'm a bit tired. But I'm also a parrot, and there are things that I must say before I go to sleep. Otherwise, I will end up dreaming with those things. Speaking about delta, but in this case, delta of liquidations, not the ratio of longs versus shorts, you can see that we are back into the green, and that is as a result of the move up. And that means that we now, in the short term, we have more liquidations to the downside. And in terms of liquidity pools, starting with the long term, we have some new developments. We didn't see this particular picture this morning, and I'm gonna tell you my take on this. It's been roughly 2 or 3 weeks, if I remember right, that the 65 is the largest pool in red. And when we display the 65 on the screen, nothing else comes close. And that's why we've been referring at this 65 as the 28 of the past cycle. If you remember, when we crashed from 65 to 28, we hit a very large liquidity pool there in that cycle. And my preferred candidate to do something like that in March will be somewhere around 65. Quite bullish, to be honest, but we need to choose something. My second candidate obviously is 46, which is the largest that we have. It lifts every single other pool in here as absolutely nothing. But what I wanted to say is not that. I wanted to say that now we have a pool above the price at 101 that became red relative to showing the 65 in the screen. Remember that this screen is normalized, so the colors adapt depending what you including in the screen. And in short, and in plain English with an accent, what I'm trying to say is that 101 became a lot more interesting because we can say that is becoming larger and larger with time. And that is precisely what we need to battle the selling wall. The more people can get liquidated in here due to getting their hands on a short in the past few days, the more the market maker is going to think that it's worth taking the price there. And we spend pretty much every day this week, sometime in the videos, talking about why the price came here and it didn't continue going lower to other pools. Was it because they wanted to increase the size in here to make their plate larger? Or was it just to trap more longs and then to dump them? And I think that should be all the focus these days to be able to figure where are we going. Now, let's remove out of the screen the 65. Let's ignore it for a moment so we can allow Trading Different, this platform, to just show the closest proximity. And you can see that once again, we are in front of this. It's very juicy, but we have already learned that even if it's very juicy, like it was around here, it was red when we were there and we didn't take it. And we didn't take it because somehow the 300 million selling wall that was there managed to spook the investors to think we might as well not achieve it this time. It's just too big, the selling wall. I know many other people were saying, bollocks, I don't care about the selling wall. We are going to go infinite up. But in the history of Bitcoin versus selling walls, all I can say is that whenever a selling wall is above 100 million, which is just has happened maybe 5 times on Binance and futures, 90% of those occasions, we never got there. It spooked the market before we got there. And there was another occasion recent, you can watch my previous videos, where we got there and they pull it out before it happened. So the question is, if we are coming here, are we gonna really hit it? Or is it gonna spook the markets again? And if it's spooking the markets, why are we going again and getting bothered to go there? Let me know in the comments what you think. I'm actually very curious to know what you're thinking. Of course, if you are thinking to hold Bitcoin and you want to hold it for the longer term, this really doesn't matter to you. But my focus is not just holding. I already built my position. Actually, I had to rebuild it from below 50s to low 60s after I sold it all at 73.5. So I'm done for holding, but this is about swing trades, potential for the upside, and trying to figure what's coming for December. On the shorter time frame, the liquidation pools are pretty juicy, very close to the price. We managed to get less than $1,000 away from hitting the liquidity pools located in the proximity of 100K, and relative to what we have below is becoming way less. And also is becoming a lot further away. So literally this is 7 times further away than if we just go and hit the 100K. So I think it's a bit disappointing to not see this selling wall to go away, particularly after seeing that the options on IBIT, black share options, should have expired because their date for expiry was November 29. So if supposedly that was the motivation to keep that wall, why is that wall still there? So alright guys, there's a lot more to cover, but I don't want to make this video an endless list of questions, leaving you the whole weekend not being able to sleep or something worse. I'll make sure that in the next videos, the one tomorrow morning going out in my channel and another one coming on Coin Bureau Trading on Sunday, most likely, is gonna include all this new information as well. Guys, if you want to trade with excellent exchanges, get the largest bonuses, and also trade with the lowest fees, which is pretty much what every trader wants to have, I would consider Bybit or OKX. They have pretty big bonuses, 30K or 20K, depending on how much you deposit, and the lowest fees as well. These are exclusive links that I have with Coin Bureau Trading, of course, the best deals. But if you are sick and tired of requiring KYC and having issues to deposit and withdraw your crypto, needing VPN or the account not being available in your country, then consider bluffing. The vast majority of the locations in the world, you can use bluffing straight away, open multiple accounts with different emails, and claim the whopping 100K bonus depending on how much you deposit, 70% discounts on the fees. Very soon I'm going to add another exchange that is also KYC free. Probably is gonna go live tomorrow in the video on the Trading Parrot and on Sunday in the video in Coin Bureau Trading. That is also gonna come with a very decent bonus. And if it happened that bluffing requires VPN where you live, I'm sure that this one won't require it. More on that on the next video. I'll see you in the next one. Take care. Bye bye.